Welcome to another video on management and cost accounting. In this video, we will be starting off with chapter 3, which is on fund flow statement and cash flow statement. In this session, we will try and understand what is fund, how is fund different from cash, why do we prepare fund flow statement, what are its advantages, who needs to look at fund flow statement, and what's the process that we need to follow in order to prepare the fund flow statement. Let's get started. For us, in our day to day usage, the term fund has got many meanings. For some of us, it simply means cash. For others, it means source of money. For others, it means the amount of money that we desire to spend. However, from an accounting point of view, fund and cash are two different terminologies which are referring to two different types of financial resources. To simply put into perspective, fund refers to the total amount of financial resources that is available with a business. Now, this might seem confusing to many of us. So let's try and look at this in a different way. Fund refers to the amount of money a business can raise if it has a need. Cash simply refers to the liquid money that is readily available with the business. So, fund refers to the maximum potential amount of money a business can raise if there is a need. Cash simply refers to the amount of money that is readily available. So, the most acceptable way to look at fund refers to the working capital of a firm. Working capital is the amount of money that a business needs for its day to day activities. So, the amount of money a business can raise for its day to day activities is what is called as fund. Now, any transaction that results in an increase or decrease in this working capital is referred to as flow of fund. So, let's try and understand a little bit more about flow of fund. So, transactions that bring about a change in working capital are referred to as flow of funds. These transactions may result in an increase in working capital or it may result in a decrease in working capital. Either way, if there is a change as a result of a transaction, those kind of transactions are referred to as flow of fund. Now, we know that working capital is the difference between current asset and current liabilities of a firm. Current asset is the measure of the assets that can be converted into cash readily. Current liability is the measure of short term liabilities of an organization. If the transaction results in an increase of fund, it is referred to as inflow of fund, or such kind of transactions are referred to as sources of fund. If the transaction were to result in a decrease of fund, it is called as outflow of fund. Such kind of transactions are referred to as application of fund. Now let's try and look at fund flow statement. Fund flow statement is a statement that shows the sources and application of funds in a technical device designed to analyze the changes in financial conditions of a business enterprise between 2 days. Another definition for fund flow statement is a statement that is either prospective or retrospective, setting out the sources and applications of fund of an enterprise. The purpose of the statement is to indicate clearly the requirements of fund and how they're supposed to be raised and efficiently utilized, and application of the same. So now the challenge that we have with the financial document, which is called as balance sheet, it represents the assets and liabilities between two time interval. However, the balance sheet fails in explaining the changes which is happening between these 2 days. It is merely indicating the value of assets and liabilities that we have between 2 days. However, between these 2 days, the balance sheet fails to explain what are the changes that are taking place in the assets and liabilities of the. So, here the challenge is that we need a statement that helps us to understand the movements of fund. Are we is the fund increasing, is the fund decreasing? So these kind of changes may not be explained or cannot be explained with the help of balance sheet. So this is the place where fund flow statement helps in understanding. So fund flow statement helps us to understand and highlight where exactly are the money going into. Has the money gone in for creating assets? Has the money gone in for meeting payment of dividend? Has the money gone in for purchase of new assets? So these kind of explanations are given with the help of fund flow statement. So it reflects the changes between the financial positions of two different dates. So it helps us to understand what are the changes in the working capital that has taken place between these two dates. Now, what are the objectives of preparing fund flow statement? The objectives is to understand the working capital position and to understand the future position of the firm. It helps us to understand how much of fund does the business have and how much of fund can the business expect in the future. So based on these understanding, an organization would be able to plan out its working capital requirements effectively and thereby plan out and chart out its decisions accordingly as well. It also helps in explaining what were the changes that had taken place earlier and what were the changes that came about in the working capital in the long run. Why is this important? This is important because it helps a firm to understand financial condition in a better way. So, based on the prevailing financial conditions of a firm, the firm can plan out its activities. Should the firm think of paying dividend? Should the firm think of buying new asset? Should the firm think of creating some kind of facilities? So, these kind of explanations are gained with the help of fund flow statement. Now, like I had mentioned earlier, the balance sheet fails in explaining what were the changes that had taken place. So, balance sheet coupled with a fund flow statement helps us in understanding a lot of these changes which has taken place in a business. Now, why is the fund flow statement important? Now, fund flow statement is a document which is very important to shareholders. It helps us in providing information regarding the availability of funds in a business. So, how much of funds does the business have? It also helps the shareholder to understand a firm's ability to pay dividend. We know that dividend is a portion of the profit that is paid out to the investors. And if the investor needs to know how likely is the firm going to pay dividend, they can try and understand the fund position of the firm. Now, this is a very useful document for creditors and debenture holders because it helps them to understand how effectively the borrowed money was utilized. We know that loan raised through creditors and debentures can sometimes be put into different uses. It could also be misused by the management of the organization. To track these utilization, this is the place where fund flow statement will come into handy. It also helps the creditors and the debenture holders to understand the capacity with which the company is in a position to repay the loan or the debentures. Fund flow statement is very useful for financial institutions because it helps them to evaluate the company's capacity to repay the loan or debenture. With the help of the fund flow statement, financial institutions would be able to evaluate and see the credit worthiness. Are they in a position to repay so much of loan? It also helps these financial institutions to evaluate and see their credit repayment capacity. So, after taking the loan, are these companies in a position to repay the loan taken? Fund flow statement is also useful to the management because it helps them to plan out for temporary investments of funds. So, just in case if there are funds available, how effectively can these money be utilized? It also helps them in evaluating the utilization of funds. Based on the fund flow position of a firm, the company can formulate dividend policies. So there are some companies which are very good or which are very consistent in terms of paying out dividend to the investors. So these kind of decisions can be taken with the help of the fund flow statement. Finally, it also helps the management to evaluate and see what are the working capital requirements of a firm. Now, let's try and understand what are the limitations of fund flow statement. The limitations of fund flow statement are we are looking with the help of the fund flow statement, we are looking at what has happened in past. So, in other words, it is historical in nature. Sometimes it may not be useful or it may not be beneficial for the organization. Now, fund flow statement is merely a rearrangement of data that is declared in the financial statement. Balance sheet forms the basis for preparing a fund flow statement. So if your balance sheet is flawed, if the balance sheet is not genuine, or if there were manipulations brought about in the balance sheet by itself, then your fund flow statement may not be genuine as well. Another challenge with fund flow statement is that it may not talk about the continuous changes. So for us to prepare fund flow statement, we need to know the assets and liabilities on two different dates. So based on these levels, we would come to know the fund position. So which means fund flow statement cannot be prepared real time without ascertaining the assets and liabilities. Another challenge that we have with fund flow statement is that it does not reveal the cash position. So we saw that there's a lot of difference between fund position and cash position of a firm. So by looking at the fund flow statement, we may not be able to estimate and evaluate and see what is the actual cash position of a firm. Now let's try and understand how do we prepare the fund flow statement in an organization. Fund flow statement in an organization is prepared in three parts. First part, we would be preparing a statement which is called a schedule showing changes in working capital. Following this, we will be preparing the adjusted profit and loss. Finally, we would be preparing the statement of sources and application of funds. The first step, schedule showing changes in working capital. With the help of the measures of current assets and current liabilities, we will try and understand what are the changes in working capital. We will try and see, is there an increase or decrease in working capital of a firm? The second statement, we would be preparing the adjusted profit and loss account. Here, we would try and see how much of funds were generated as a result of the operational activities. Did the company manage to uh, generate funds as a result of operations, or did the business end up losing funds as a result of operations? So that's what happens in second step. Third step, we would be preparing the statement of sources and application. So here we would be listing out all the sources of fund, then we will be listing out all the applications of funds. And when we are preparing this statement, which is the statement of sources and application, we are expecting the sources to match with the applications. So these are the three steps that we would be following with respect to the preparation of fund flow statement in an organization.